Here are 4 metrics every business owner should review on a regular basis. Number 1, net profit margin. Net profit margin is important for you to validate your business. If you have a 10% net profit margin, it's likely that you have a healthy business. Number 2, revenue growth. Revenue growth is important because it will help you understand whether your business is growing or declining. Depending on your industry, it can vary, but ideally, your business should be growing 20% year on year. Number 3, accounts receivables. Selling and increasing your sales is great, but if you can't collect the cash, you're going to fail fast. Ideally, you shouldn't have more than 10% of your receivables outstanding for more than 90 days. Number 4, cash flow. Keeping track of your cash flow is very important. Not all payments are regular, and not all receipts are consistent. Keeping an eye on your cash flow means that you're keeping track of when the cash comes in and when the cash goes out. It's important to have 3 to 6 months of your operating expenses in your bank account. If you find accounting overwhelming and you need a 3-in-1 expert, give us a call.